Good morning, everyone, and welcome to the Morning Market Report. Man, market pullback central over on the daily, guys. We had some PPI data came in this morning. Yo, gang, let's effing go. Alex O dropping a $50, 50 Canadian dollar super chat right out the gate. Appreciate y'all being here. Shout out to the gang joining us here. Alex O was over there doing some cranking out some trades this morning, trying to navigate this crazy market that was created by PPI data, guys. Inflation coming in a little bit hotter than expected, like quite a bit hotter than expected. Top it off, it also is affecting the likelihood that we're looking at on rate cuts. Why? Because we also got unemployment rates this morning, which were not as bad as expected. So better than expected job numbers means we're not really having to cut too quickly, despite the bad job numbers we've recently had. And then on top of that, you got PPI, which is saying, hey, inflation ain't going anywhere, guys. We're going to break all this down this morning. We're going to take a look at the charts. We're going to take a look at some headlines. What does this mean for rate cuts? How is everyone going to react to this, guys? Stay right there. Take your notebooks out. Let's get this. You guys know what time it is. Class is in session. Let's go, guys. Good morning, everyone. Thanks for joining us here. This is the Piper Academy Network. I'm Army Piper. We go through the macro data. We go through TA. We go through headlines. We go through what is the so what that is going to move the markets. And as the thumbnail says today, the end is near. According to Rect Capital, we are about 93.8% of the way until this bull market is done. We're going to take a look at some metrics on technical analysis that show us where that is at. So that is what we're going to do. But let's go ahead right now and bring up the OC guy. Let's get my co-host up here, give a shout out to the chat, and then we're going to go ahead, jump in on this Bitcoin chart, talk about what's going on, bring it back and do some news. What's up, OC? How you doing today, bro?
Oh, I'm doing fantastic. Finally, Bitcoin dumping. So I was expecting yesterday, not Bitcoin, I mean Ethereum dumping. I was expecting yesterday an Ethereum dump. Remember, I was already into a trade there. And despite things just looking a little bit bullish for Ethereum, it absolutely went down with Bitcoin. On Bitcoin, we did called out a BOS breakout long. We were into profits, moving stop to entry, came back down, took us out, but that was pretty good. And despite that, I mean, I think we make a pretty penny on Ethereum. And also, I was looking at LDO for a possible short. So, other than that, pretty happy to see this dump played out, to be honest.
Yeah, it definitely was a pullback, but we are holding that $4,600 range. We're fighting to keep that as the $4,600 range on Ethereum, and then right now Bitcoin. Guys, we put out this Bitcoin level all week long. We've been talking about this Bitcoin level that it hit, and I'll show you that on my chart. Let me go ahead and jump over there, and then we'll bring it back to OC, and he can talk about where we are in the markets right now. Let's go to the chart. Let's go. Let's get it. Taking a look here, guys. This is the level that I talked about all week long. I said, look, we've got a massively strong support level coming in right here at 117,980. The other level coming in right here below at 117.5. We showed that that was a massive liquidation level for the longs. If it was to pull back to there, it was max pain for longs. And then also it was our point of control on this big, huge volume nipple right there on that fixed range volume profile in our 50% fib level. Yeah, we have created a new fib setup because this was pulled from high to low, but it was a fake out above that zero level right there, that zero level coming in right at 123-ish, 123, 231. That is the fake out that we did above that. You can see pretty much candle closes were all below that for the most part. Now we've come down and we've bounced to this 50. Now, what I've said numerous times is if we come down and we bounce on to 50%, that's a very bullish play to happen, and that's what I'm watching closely there with Bitcoin. That's going to be the play that I'm watching on that. Of course, we look over here at Ethereum. Look at that, OC. That got that rounded top. We have lost the 786. That is a platinum pocket rejection there on Ethereum right now. The level that I honestly have to watch for here is going to be like $3,900 to $4,000, OC. You can see right here, we got a dynamic reactor coming in that's an algorithmic moving average for those that don't know. We've got a lot of people in here that may not be familiar with that terminology. Dynamic reactor is an algorithmic volume moving average. Nothing nothing that you're going to recreate through technical stuff. It's a chart prime indicator, but it is running right here nicely into the golden pocket right now. I do have a fixed range volume profile that I can put on here, and we'll see how that is laying out with confluence to those other levels. Let's go grab that. And we'll just grab it from the golden pocket range, pull it over into here, and you'll see right above that golden pocket here is going to be our value area low. Point of control coming in about 43. Value area low about 4150, and then golden pocket coming in right at 4,000. So if we do continue down, that would be the range that I would watch for, is that 4,000 to $4,200 support. Of course, we do on the 4 hour as of right now. We do have money flow starting to curve over and volume starting to curve over. Looking here at the daily on it real fast on Ethereum, just to give you an idea where we are right here. We do have a pretty strong, that's a weekly. Let's go to daily. We do have a pretty strong run up and then flattening here. We're creating that plateau on the histogram for the MACD normalized, and that does indicate that we could start to see it come down. You see how it started to get flat, starts to get flat. That's typically what happens, right? We've also got the overbought. The power bar has triggered the downtrend arrow. True 7 has fired off. And guys, remember yesterday I was talking about I want to see this shortening of the candles start to happen. We're starting to see that shortening of the candles on the RSI prime. And what this is taking an RSI ribbon and turning it into candlesticks. I can go into the settings once I do this, put these on Heikin-Ashi candlesticks, and then you get that Heikin-Ashi play on RSI, and it typically plays out pretty decent. You can see here started to get really into that dark red. That's right there. We kind of consolidated in that area and had a little pullback to support and bounce. So we are starting to see that again come in here on the daily for Ethereum also. That's what I got there, OC. Let's go jump over to your chart. What are you seeing on Bitcoin right now? What are your levels you're watching? And then we'll get into the news after we give a shout out to our alumni in the chat and the OGs and alumni. Drop the otters in the chat there, guys. OC, what do you got on the Bitcoin chart, bro? You're muted.
So let's go. Let's do a little recap here. What is it? Oh, that was muted. Am I still muted? No, I should be.
No, you're good now, bro. What do you got on Bitcoin?
Perfect. So let's just do a little recapping here. Previously, we were expecting this little short to be to play out at the same area. We had to wait a lot for this. As you can see, it was half of an entry and then another half of an entry. As we came in here, we executed half of an entry, coming back down, taking profits 1, taking profit 2, and then moving our stop to entry, leaving this 25% in to reach this target right down here to dynamic reactor. But what happened is that we run up into this area. We created a break of structure here, and this is something that we've been talking about a lot on this channel. Like if you're gonna be making a break of structure trade, like for example here, a break of structure, that would have played out very nicely. But I mean, you need to be careful because you could be buying the top, right? So knowing that, well, then we had a break of structure yesterday night, and this is what we called out, right? The break of structure trade we created, we were on the next candle right here on profits. We move as always our stop to entry, and what happens right away, immediately it came back down, took us out at 0 loss. Still, that was a quarter of a position, so that was a pretty nice trade. Nonetheless, when we look at this chart, we went right to that target right down here on this short. So taking it backwards, I mean, it would have been nice if I would have held it here for the next run up. But still, since I moved my stop to entry right away, well, this would have also taken me out. Nonetheless, we are within the same range area. Let's go back into the next situation, because in here, we're looking for a range to be flat, all right? And we also have acknowledged that the range, most likely, it is downwards action, right? It is within a downwards action. Let me just clear this up a little bit for you guys so we can keep track of what's going on. So there we go. Just get rid of this very quickly. And here it is. All right, so talking about the downwards range, we can see the breakout happening here. It's not about your breakout, remember, it's about your retest, your re-entry for the long. There we go. And right now we're running into a dynamic reactor. So should we be entering here for a long? I would say that we need to give it a little second here, maybe one or two more candles just to see if we are holding or rejecting. I mean, catching the very bottom, that is pretty fantastic, but it's much better when you have confirmation that we're not going through. In fact, I do recall this area. Remember, a very dangerous trade right when we were hitting the very first candles right there. So still, I'm gonna be calling this one out for the same thing. So very dangerous trade if you want to long it right there. I'd rather wait for one or two candles, and on those one or two candles, I want to see my oscillators start flipping up, or at least my money flows start pushing upwards. But right here, we can see that despite we're bullish, we are losing the strength right here. Are we bullish? Yes, we're still very bullish because we're above dynamic reactor. But look at our consolidation score. It start rising a little bit. So it's nothing like really too crazy, but starting to see that one that might be indicating us that we could be getting into a period of ranging just like we did in here, having our first top, second top, and then a period of range. So we'll have to wait to see if we hold or lose the dynamic reactor. For me, the dynamic reactor is going to be the decisive factor, whether if I long it or I short it. But that's what I got. And of course, we have an Ethereum fail right there. We did had our peak performance diamond finally playing out. It was doing basically nothing, and finally it played out fantastically. By the way, it's time to take some profits, especially because look at that wicking action right here. It's calling out for some absorptions, and that absorption it's not good in a short. Still 50% out. Let's leave it as is and move your stop to entry, and then we'll see how that develops.
Absolutely. Yeah. We're actually seeing that across all the markets. We're getting ready to jump over there to that. Let's jump over to the old alumni and OG chat here. Guys, what's up? Jesse Gellick, Asako Tano. I see you there. Vanessa Pelser. Appreciate you being here. Alexandra G. Of course, Alex O. Crypto and the entire OG gang. BC Port Corp. Crypto Billy. ZYXO. XYZOZYX. That's the name. Said, is this a clickbait title or is King Bear back in full swing? No, it's actually not. And let's jump over and I'll show you what it is. It's actually, this is from Rect Capital. He's a pretty good analyst. If I missed your name in there, JR, I see you might play Eric Ballenwall. Appreciate everybody that's in here right now. 170 of you guys in here. Please smash up that like, guys. And if you haven't subscribed, hit the notification bell. We do this every morning, breaking down the macro. Let's go jump into it. And let's show them what we do over here at the Academy, man. Jump into the news and go over all this data for you guys. Looking here at the news today, guys, right now, this is our crypto market cap metrics from Into the Cryptoverse, currently sitting at $4.02 trillion. On the metrics there for that trend line on that is at 4.203 trillion. We are currently only undervalued on the total crypto market cap by 4.53%, guys. It's not too far off. And getting back into that median, I've showed you guys on this chart before. When we go into this median era and we break above it, that's when we get our big parabolic runs. We haven't even hit that this cycle as of yet. So where are we at on the wristbands for our DCA plan, the Piper plan? It's at 55.7%. Basically, what this does is it gives us risk bubbles on Bitcoin. We also have it for altcoins. And when it pulls down into these lower bands, like you can see this one here is at 0.147. This is a 14.7% risk band. Of course, up here you have a 0.72. That means 72.2. We would be taking profits in the 70s, right? Right now, we're currently sitting in a 2x DCA, and it's part of the DCA plan that we have over just for being a member here on our YouTube. So if you guys are interested in getting into a plan that gives you where to buy, how much to buy, and how to get out and keep your profits, we have it all with the Piper plan in our Discord. looking here at the Bitcoin dominance with stablecoins right now, guys, we're sitting currently at 58.83% with stablecoins included in the Bitcoin dominance. Take the Bitcoin stables out of that Bitcoin dominance, and you're sitting at 62.77, still sitting pretty decent, meaning a lot of the money that's leaving right now is going into stablecoins, not altcoins. So smart money moving into some wait and see cash. Looking here at the fear and greed index right now, we're sitting at 75. We're 1 point below that extreme greed. And yesterday, I want to point out, first of all, I want to point out, shout out to Alexandra G with gifting the 5 memberships there. Froth Dog Millionaire picking up one. Golden Child, what's up? Welcome, Golden Child. Helder Marquez and Shark Vin and Froth Dog Billionaire and what is it, Kala Vinca? All picking up a membership, guys. That gives you access to the Discord. Connect your Discord, go to the Discord, link below. And this membership, this $5 is what gives you access to all of our trade setups and to our dollar cost average plan, the Piper plan. So check it out. Some good stuff in there. Stocks and crypto, by the way. Yesterday, we were at 76% on the fear and greed index for Ethereum. And I told you yesterday, OC, when you were talking about your short, I said, you might actually get it because we're sitting at extreme greed. It might be the time to happen. That's what we're getting there. Matter of fact, this morning on that Ethereum, extreme greed sitting at 78, continuing to pump up. Where did I get that whole thing about the end of the market, guys? It comes from this right here. Rect Capital, Bitcoin bull market progress is sitting at 93.8%, and progress will speed up on parabolic advances, meaning if this price gets another rip and tear through the roof, that will speed this up even more. We'll show you on some chart where I think that the end of that market is coming, and we're not too far off as of right now. Let's go jump in and talk about liquidations in the past 24 hours. Past 24 hours, guys, 213,000 traders got liquidated for a total of $1 billion. Biggest liquidation happened on OKX. It was the Ethereum trade, valued at 6.25 million on a single trade. Looking at the stock market this morning, how's the Dow Jones doing? How's the S&P doing? How's the NASDAQ doing? Well, I will tell you that they are kind of rebounding, like we're seeing on that buying absorption of the bearish sell-off with that wick that you saw on Ethereum. We are seeing the same thing here on the stock market. Dow Jones is only down 0.2% right now. S&P and the NASDAQ down 0.09%. That's it. They're starting to bounce back up. Russell 2K, of course, small caps, that's the altcoin equivalent of the stock world, if you don't know, down about 1.26% there. And the VIX is starting to get green again, meaning we're seeing some volatility. The bulls and bears are at war. This is your war indicator. Bull bear war indicator. It's the volume index, volatility index. It's the VIX. And you can put this on your chart and actually watch it too. When this goes up, you start to see a lot of crazy swings in the market. So as of right now, though, guys, starting to flatten out on the stock market. Look at the Europe markets overnight. Mostly was in the green. Asian markets was in the red for the most part, except for India. The Nifty 50 there and the ASX 200 were both green. Look at the bond 10-year yield starting to go back up again, guys, 4.262. And this is going to be a big factor for money. It's not really the rate cuts that affect. That's how banks lend, right? That's how they borrow money, is that rate. This is more along the lines of your mortgage, your auto loan, stuff like that. That's what affects this, and that's why that stuff is so high right now. We need this to come down. Please get this 10-year yield down. Looking at the oil markets, they are green except for natural gas overnight, and then gold is making a pullback down 0.7% right now, under $3,400. Is at $3,384. Silver sitting under 38. Copper is making a 1% move to the downside, while palladium and platinum are trying to hold on to their gains, up 0.92% and 0.72% relative to platinum and palladium. Let's go jump over, talk about the alt season, guys. When's alt season? Not yet. We're currently sitting on the alt season index at a 51. We need to be at a 71 to start that season, guys, and then sustain above 75. So we're still about 20 points away from an alt season effectively being here, according to the alt season index. Of the 30 top indicators right now for the bull market peak, I wouldn't get too excited about shorting the markets on that 93.8% of the market being done because the bull market peak indicators We've hit zero. They're all still red X's. None of them have triggered as of this time. Let's take a look at what the current price levels are and the pullbacks that we've seen today. Here, guys, Bitcoin's currently sitting at 118,572, down about 2.7%. But look at XRP, down 4.4 and making a return on the hourly. And you can see this first line here. These are your hourly setups. Your hourly gains or losses, and they're all pretty much in the green. We are seeing an absorption by the bulls to take control of that price and move it back up. But Dogecoin down 5.8% there. Other big movers, Stellar Lumens 4.6, Bitcoin Cash 5.3, and that's pretty much it. A lot of this in the top 20 has been started to be reabsorbed here by the bulls, running it up here. Wholesale prices, this is what caused that shakeout this morning on the market dump, guys. The wholesale prices rose 0.9% in July. Wholesale prices rose far more than expected in July, providing a potential sign that inflation is still a threat to the U.S. economy. A Bureau of Labor Statistics report on Thursday showed the Producer Price Index, which measures final demand goods and services, jumped 0.9%. We'll take a look here and see what this actually means. PPI month over month was previously at 0%. Consensus and forecast was that it would come in up 0.2%. A slight increase in inflation came in almost a full point higher on that PPI. What is PPI, you're asking? Well, let's go down here and I will show you. The producer price inflation for final demand measures month over month changes in the price for commodities sold for personal consumption, capital investment, government, and export. It's comprised of 6 main price index. Final demand goods, which includes food and energy, stuff like that, where you, the consumer, are the final receiver of that, right? Final demand trade services, final demand transportation and warehousing, and then final demand services, less trade, transportation, and warehousing. So a lot of basic necessities that we use in personal consumption and that businesses use in their production. That is the producer price inflation right there. And again, came in almost at 1% up to 0.9%. Core PPI for the month over month, though, this excludes food and services, right? Food and energy, I should say, and not counted in their number. It was also up 1%, which means we're seeing this across the board on a lot of these sectors that are feeding the inflation numbers. Was expected to be there 0.2, maybe even as low as only 0.1, came in 0.9 also. And then that means, let's explain this for you, let's break it down. Break it down Barney style. What this means is that inflation is stickier than expected. When we see inflation numbers go up, it means the Federal Reserve will not likely cut rates. What would make them cut rates? Inflation coming down, or seeing a massive continuing increase of weakening of the labor market, meaning higher job losses, stuff like that, a bit more layoffs, right? Those two factors bring down the Fed rate and help them make a decision to cut rates, right? Well, we saw the inflation come up, didn't come down. And then to top it off, we had lower than expected unemployment claims for this week. Was at 227,000. Actually, it was at 226. They ticked it up 1K on a revision. Was expected to be slightly higher. Came in lower, which means we're seeing a little bit more strength than expected in the job market and a little bit worse inflation than expected in the inflation space. So those two things combined mean very unlikely to see some rate cuts. Matter of fact, some people are even claiming that we're going to see inflation come in even harder off these tariffs. Goldman Sachs actually made this call. We got an article here about it. Goldman Sachs made this call and said, hey, we're going to see higher tariff inflation coming, and Trump berated the heck out of them. Now other economists are jumping on board and saying, yeah, we kind of agree with Goldman Sachs. Goldman Sachs is taking heat for its call that heavier tariff-induced consumer inflation is ahead, but it's far from alone in that view among the Wall Street brethren. Most see it as at least as steady grind higher in prices as tariff clarity emerges and what looks to be effective rates around 18% take root. No one is calling for a runaway inflation. To be clear, monthly gains of 0.3 to 0.5 are what most expect, but that could push the Federal Reserve's preferred core measure to somewhere in the low mid 3 range. Remember, they want to see 2, and that is making the likelihood start to shift here. Sorry about that flashbang. Shout out to Alex O Crypto. Flashbang. That is starting to make the CME Fed Watch tool move its prediction. Yesterday, it was at a 100% chance of a rate cut in September. It's now a 92.5. We're seeing a 7.5% chance now of no change in September. So These next numbers that come out are going to be super important as we go into September and see if we're going to get that rate cut. Of course, move here into October, we're at a 97.2% chance that we get a rate cut. But check this out. 57.4% chance is that we see a 50 basis point. That would be a double rate cut in one meeting. So we're going to keep an eye on that and see how that all plays out right here, guys. But as of now, starting to see a shift away from a rate cut happening in the markets. Let's talk about this max pain, because we've been telling you guys this on max pain for the shorts was sitting around $117,000, 117.5, and it's been that way for a couple of weeks. Where did we just hit? Well, we hit that level, guys. And so that max pain has now been hit. Looking at the monthly now for shorts max pain, it's 119,944. Of course, the long pain is at $111,881. We're much closer to this max pain. Market makers making this money off the shorts than they are off of making this money off the longs. I do think that we are going to see some absorption and pump to the upside. Let's talk here about this real fast, and then we'll show on the chart. Guys, yesterday we broke this down for you. That July and August is typically green, okay? And I'll recap on this yesterday for the people that did not see this. Look at 2013, July, August. You can see that right there and right there. July, August, green, September, red. Okay, 2017. This is the fourth year of the cycle, right? Green July, green August, red September. 2021, green July, green August, red September. Now in 2025, green July, green August. Will we see that red September? Very possible, but we also showed you on the chart. So I'll go ahead and jump this over here. We'll go into some chart setups here with OC. What's up, bro? How you doing over there, man? Look at that absorption. Look at that absorption running, man. I'm telling you, guys, don't get too excited yet. Yesterday, we talked about these levels. If you look at July and August on the charts, let me go back there, bring it back like we left something there. There we go. If you look back at these charts in July's and August, we typically had that pullback in September, and it came in on the support band. There we go. Bull market support band and the dynamic reactor. And you can see, let me get rid of the Mexican spaghetti brought to you by the OC guy. There we go. Perfect. You can see going all the way back here to 2013, back. We had that pullback. What does it pull back to? It pulls back to the support band, also in line with the dynamic reactor from Chart Prime. So July, August up, September pullback to support, parabolic run for the end of the cycle, okay? And that's what Rect Capital was talking about. Yeah, we're 93.8% done with this entire thing, right? But the biggest part comes at the very end. And that's why you don't want to leave yourself away from this right now. You want to be prepared, and that's what we're doing. Don't be scared, be prepared. July, August up, September pullback, where? Right there, bouncing cleanly on the bull market support band. Go to the next cycle here. Again, July, August, pumps up. Where's the pullback to? Support on there and another run up. Guys, these pullbacks have been about 25%. On average in that range, but you can see that's an 80% pump up, just that little move right there. What would it look like right now if we look at this level for the pullback after this July, August, which, we're halfway through August right now. Take a look here, July, August, we get up. I think we have another pump up here, and we get that pullback. There's the bull market support band. So what are we talking about from a pullback of, say, like 130? Down to that level? Well, that would be the wrong button. There you go. 130 down to that level. You're probably looking at like 12% pullback, which is much less than what we're seeing in these previous cycles. So overall, I think that we do have some good levels of support. And if we do get that September play out, guys, it's going to be a nice run and we'll take it. But just be prepared for it. September could be a pullback month. Looking here at the cycle, that 93% that he's talking about, this entire run here, right? 93.8%. We have this indicator that I've been watching here for a long time, and it's pretty much your profit taking windows. You just do a laddering out with your profits as you go in, leaving like 5%, 10%, 15%, right? And then you do this start going into 10% moves towards the end, right? And get all of that profit run there. Well, if you look at this, we've only got about 84 bars to go. 84 days, I should say, to go, 12 bars. So about 12 weeks, 84 days before the end of this cycle. So, yeah, we are getting very close based on the historics. As of right now, though, guys, I think. I think we take advantage of these pullbacks and we do that dollar cost averaging plan. And if you're looking for your trades, do your trades. Obviously, you can use your trades to hedge even. So, like if you're, hey, I'm dollar cost averaging to go up on spot, but I'm going to hedge a short here based on what I'm seeing on other metrics here and on the charts. And then that's how you protect your wealth. That's the goal every day. The goal isn't to make, 1,000x. We've showed a video of the person throwing the frisbee all the way across the disc golf course and hitting that shot, and they said that you have better luck making that shot than you would on finding the next 1,000x. There's just too many tokens out there. But what can you do that you can control? You can protect your wealth, and that's what we try to teach here at the Piper Academy. OC, we just went through a whole lot of data, man. But yeah, if you take a look at what we have there on timeline, that 93.8% chance with the parabolic run at the end, September pullback. We're talking October 31st, November 3rd being the window for the end of the market. What are your thoughts on this? Do you think Rect Capital is the end near, as the thumbnail says today? OC, what's your thoughts on this, man?
Well, of course, like nobody knows the future, right? Especially not talking about Bitcoin. But I think that the pattern is there. So, I mean, we just are here following day by day, looking at the pattern played out. So, I think it's just follow all the plan, right? I mean, we traded, like, for example, yesterday we were talking about shorting Ethereum. It did play it out. And also, yesterday at the same time, I was talking about closing my short on ENA because it was just not moving. Actually, I was on a loss. And well, then depending on how the time goes by, we start looking at our indicators, and then those indicators start reversing, right? So we get prepared, as you mentioned. It's not about being afraid; it's about getting prepared. And based on that, well, we could be taking some new action. So regardless what happens, I think the end is near. Talking about maybe this couple of months, but that pullback on the end of September, I think that will be really an opportunity to maybe jump back in for the next run up. But yeah, I mean, I think that will be an opportunity more than a disaster.
Eric Wallace said, "Oh man, we're never getting a rate cut." Piper should be the new head of the Bureau of Labor Statistics. You couldn't give me that job if you paid me an ass load. Did you guys know the story about an ass load? I got to tell you the story. Story time with Army Piper. Here we go. All right, guys. So, I back in the day, if you guys don't know, I was an Army intelligence analyst. So analyzing historical trends and patterns to predict what happens next is kind of what I did for 22 years. Academically trained to do this. I was reading through a HUMINT report. If you don't know what a HUMINT report is, it's human intelligence. This means an intelligence collector went out and talked to an informant and got information. And in the report, he wrote that the individual had moved an ass load of heroin across the Afghan-Pakistan border. And I said, did he really write an ass load in here? Man, that doesn't tell me anything. And so I started doing some research and everything and found out that an ass load is a measurement, it is a level of measurement in the Middle East. And so an ass load, so a camel load is about 900 pounds, and an ass load is about 1/3 of that. It's about 280 pounds to 300 pounds of weight of narcotics. So an ass load, what can be carried on a donkey versus a camel load. Now you know. Now you know. There you go. So an ass load, they could offer me an ass load of money, 1/3 less than a camel load of money, and I still would not take that job at the Bureau of Labor Statistics. So, all right, OC, what are we seeing on some altcoins, man? Let's jump over there and let's knock that out, and let's go start looking for where's the levels of support, because I don't think that long term we want to get into too many shorts right now. They might be great for scalping, but I still think we have a little more time on the market run. What do you got on the alts, bro?
Absolutely. Let's get started with Ina. Sorry, not Solana. With Ina, and that is actually touching the same point that you were talking about right now. So for long-term shortings, well, we're getting to the dynamic reactor, which is support. Also for long-term shorting, well, we are rounding up on the bottom oscillator here, which is not good for shorting. And also, well, flip of the ribbon incoming, which is what we were looking for to long it or at least head switch it. So I mean, this actually forecast or shows exactly what you mentioned. I mean, the short that we took is not because we're bearish; it's just because we were just overextended, right? I mean, I was explaining that right here when we get that run up. Right on that run up, we get overextended, and that overextension it is when we're going for that short. In fact, I was just explaining here, and it's already gone. It was a little bit too nerdy, but let me explain it once again. When you have your XY, your XY crossing here, and you're looking like a quadratic equation or with a parabolic equation, well, then you start going something like this. Your flat, start going parabolic, 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 parabolic. And then there is a point that you can never reach this end and you go to infinite, right? So right there on when we're talking about money, you cannot get to infinite. You cannot get to that point. So before we start hitting the infinite equation, the market needs to crumble, right? And that's exactly what we were looking for. So right here, we were measuring the parabolic movement, and almost as we're going straight up, right? Going into infinite, well, that's when I start looking for that breakout, that crumble of the market, going for that breakout. Something important that when we're using a parabolic measurement, let me just do this same parabolic tool here, or you know what, let me just right click it, let's clone it, let's move it out of the way so we can appreciate the next draw here, drawing. And this is just a little bit of a lesson that I want to show you guys, and I promise I'll be moving faster after this. So on this parabola, there is not really a trend line that we can do, but we can absolutely look for these areas of liquidity left out. Why? Because when you're going parabolic, your X move faster than your Y, which means there's Y amount that doesn't get taken. So it's just when you're trading, the thing goes faster, and then your position was skipped. That is the amount of liquidity left out. All right. So we're looking for that left out amount of liquidity, and we look to where we could be coming back down. And based on those 2 points, well, we create a trend line. That trend line defines our area of entry. So when we're losing that trend line, we're taking that entry. That's exactly what we did in here. We analyze for the parabolic movement, we analyze for our liquidity left out, and then we created our trend line here. As we were breaking the trend line, we open up that trade. We were on negative in here. And finally, yesterday, we were saying, all right, time is ticking. We could be looking at this reversal on our oscillator, and we're very close to having a flip of the ribbon. So, I mean, if we have the flip of the ribbon, we need to close this short, regardless if we are on profits or not. And I was explaining, well, as long as I get just a little bit of that movement, I'll be more than happy, and I'll be looking for my target price. First liquidity zone here, second liquidity zone right here at the dynamic reactor. And what happened right now is that finally, 3 candles or 2 candles right after the flip of the ribbon, we did reacted. But also look at your absorption zone. This is just huge, right? It's huge. So the point of this is that we already have reached it. We already have crumbled down. We already have catch some liquidity right down here. It's time for us to stabilize and continue our way up. So this trade is been taken. That was perfect. It's been closed already. And then we're going to be looking for a long opportunity. So for me, I'm just going to be waiting. Maybe if we come back once again to these areas and then going for that long. But also you can see that I was expecting in the worst case scenario, like if we had that flip of the ribbon, for this to move from here all the way to previous highs. So looking for that BOS long, the same thing that we did exactly on Bitcoin. All right. So that BOS, it's already out of the question. Why? Because we did have that parabolic crumble down, right? So far looking fantastic. That also feels like, when the water is getting to your neck, like, come on, this needs to move now or never, right? So it was a very nice, played out last minute, very packed of action, at least on my side. And well, that's it. Talking about that, LDO actually played out fantastically. We did not have a parabolic move. We did had just a straight up move, XY 1-to-1 moving here, breaking that trend line. We actually caught the very top in here and then coming back down. Let me bring my alerts so we can actually look at when we start taking some profits. LDO, so taking profits 1, taking profits 2, and basically just letting it go. So since we did not hit our TP2 right away, I mean, look at that. It was very, very, very close, but at the end of it all, it did not hit it. So it's time to close this long as is like this. Sorry, this short as is right this like that. All right. So that was a pretty good short, still a 1/4 of an entry, and also looking for a BOS breakout continuation. And that is because it was in the same exact setup that we saw INA, right about to start flipping back up. So that's what I got on those two. Let me hit first Ethereum because I was missing the actual chart that I was into, and here it is. Ethereum was hit at 7 a.m. So right when a little bit right after I wake up. So that was a fantastic timing. It hit my alert. There you go. This is the short that we were talking about yesterday. In fact, if I bring up yesterday's video, you'll see that this is, hey, look at that, almost the same shirt, almost the same setup here. So we had that setup. We went into that short perfectly and came back down into our TP number 1. By the way, this trade is cooked. I already have taken 50% out, move my step to entry, and I don't think I'm going to be taking another 50% out because look at that absorption. It's just, I mean, it is incredible how much money can be absorbed like from one candle right away. So I think that we could be preparing for the next long on Ethereum, or at least a little ranging here for then taking off like that, which is the main plan for me to take it. And yeah, I think, do we have some more time? Do you want me to pass it over to you? I have a couple of other coins to look at.
Yeah, we'll jump back in on those. I just want to give a shout out to the chat. I just dropped 5 new memberships. Lemonade, X Sin, Warrior 4588. Haven't seen you in a while, bro. Welcome. And DJ Jaguar Professor. We got a new professor, Professor 807. Shout out to the new members. Welcome to the alumni. Go check out the Discord, guys. We got some good stuff over there for you. Also, OC, I want to take a look over here real fast on my chart because I'm watching something on Bitcoin. Yeah, so I pulled my Piper Sniper kit. If you guys don't know, it just does automatic fibs. It just auto pulls fibs based on your last lines, and so it's pulled our fibs from this low to the high here. We have it inverted now for the golden pocket and platinum pocket. Look what happened, OC, right there. 50% bounce. You know what I say about that. If you get a support on the 50 coming down on a retracement and it holds it, that typically leads you to higher price action. So I do see that we are getting that buyer absorption coming in, wrecking the bears. The bears are getting wrecked. Drop the pie bear in the chat there if you got the emojis. The bears are getting some pushback here from the bull. So I just wanted to bring that up. Give a shout out to the new members there in the chat. And OC, what else you got for? Oh, I know what I was going to tell you. OC, check this out, bro. Check this out. PPI, FX Evolution. I follow him on X. He's got some great data. He's talking about the PPI. And this makes me wonder. I'm going to talk about this in a second and try not to get political, but I'm going to get a little political here because this is a political thing. Veggies were up 38.9% month over month. Meat and fuel was also up. Now, what this makes me think about is we just had a recent change. What is that? I don't even know why you're on there. Here we go. Get rid of that. One of the things that makes me think of is we just had a recent change starting September 1st, I believe it is, most states for EBT, for food stamps. And they can't buy sodas, they can't buy candy, they can't buy junk food. And the problematic set on that is that it forces them to buy healthier food, which is a good thing, right? You want your children to eat healthy stuff. Big problem is though, is that in some lower income areas, to include, like areas in the Appalachian Mountains, areas of inner city, there's not a lot of grocery stores. There's a lot of bodegas, not a lot of grocery stores. They're food deserts, right? And so a lot of the bodegas have prepared foods and snacks and stuff like that, and so they can't buy that stuff anymore. They have to buy veggies and meat and stuff like that. How far is that going to stretch when you're taking a look at 38.9% month over month inflation on veggies and meat? So, just another point that I wanted to bring there. And then Robert Mulligan asked a question. He said, "Do we really think we'll see the pullback in September?" I do think we'll see a September pullback, but I think that September pullback is going to be in line with what I was showing on that chart, which again is a much less pullback than we typically see. We typically see about 25%. Looking at this level again, down to that bull market support band, it's only about a 12%. So that's where all of the new money, the institutional adoption into Bitcoin, so on and so forth, that's where it plays in, is that we don't get as hard of a pullback. But typically, if a pattern keeps repeating, you operate on that until you see something else. Everything that we're thinking of because of the institutional adoption rate on Bitcoin is not really giving us anything. We don't have anything to go off of on that except for hope. And so at the end of the day, as I said yesterday, guys, when we look at hope, where is it? Go back here. There we go. Get down there. Get down there. Hope is not a strategy. We operate on what we know, and right now, what we know is the trends and patterns. So that's why I think that we will see about a 12 to 13% pullback, maybe 10% in September before the next run up. We'll know when it hits that bull market support band and gets a bounce, and then we'll ride that out for the rest of the cycle for about another. Quit getting rid of my E signal. That's the OC signal above your head there, OC. Here, let me do this. I'll get rid of it for you if that helps you out.
No,
I don't
that's
even know
fine.
where
That's
it's
fine.
at.
I just want to
Okay.
make, jump into the train of like we demolish Ethereum, because Ethereum has been a pain in my ass, man, for the longest that I can remember. It's been slipping through all my fingers, and I mean, I know you put that for a joke. I love that, right? I'm just doing my little joke back here, but yeah.
OC doesn't like his ETH signal here. There you go. It's gone. I got rid of it for you. No more ETH. I'll just throw it up there randomly behind you, and you can see if you notice it. How about that? All right, guys. We had a request, OC. We had a request for Near. Can we take a look at Near on the way out? I'll pull it up here, and we'll do that, and then you can come back and do yours. It was XYZOZYX said, can you guys have a look at Near on your way out? And yeah, let me pull that up here and get it on the screen. Where is it? Donde está, OC? There it is. All right, let's pull up Near and let's get that up here on the screen and take a look at that. And then we'll come back and see what you got on the alt side. Let's go into Near. Let's do that. All right, so looking at Near, let's go over to my daily first to get this top-down view. Let's go to Near Protocol. Come here, Near FAR. I got a story about that too. I'll have to tell sometime. Private FAR in basic training. Near, let's just go search for it this way. Yeah, so Near and FAR, we had a drill sergeant that liked to scream out, "Show me Near, show me FAR," and when he said, "Show me Near," you had to run as quickly as possible to the drill sergeant. When he said, "Show me FAR," you had to run away from the drill sergeant because they like to play games in boot camp. And when I was, we had a private named Private Far, and my sarcastic smart ass that I am and always will be, when the drill sergeant says, "Show me Far," and I pointed out, so drill sergeant, he's right there. And yeah, I got the shit smoked out of me. So not a good idea. All right, looking at Near Protocol here, guys, we are seeing a histogram. It was kind of flat. Looked like it was going to pull back. Did it pull back? It did, down to support, and then got a nice bouncer. It does look like it's coming up. Money flow is in the green. Volume is going. We are seeing, though, right here, this gives me cause for concern that we're about to see another pullback here. We're getting wicks on top of the RSI primed Heikin-Ashi candles. And typically when you see that, where you start to get the wicks right there we go. There's wicking coming on. Down we go. There's wicking right there. Down it goes, right? So we could be looking at that happening here, considering we're at the 70% line already. which is this is your resistance zone, your rejection zone. You can see here it got really hot and then came down, made that. Also, though, we do have a head and shoulders pattern here. You can see that there's your shoulder, head, shoulder. This is a breakout and retest. So at this point, I would be on a wait and see. Why? Because we do have a head and shoulders pattern that looks like it's playing out. We did just get a bounce and retest bullishly on the daily off of the dynamic reactor, and that would give that a move. Let me just do that here and see what that move would look like. Let's see what that move would look like in here. Give us an idea. That would give it a target of about $3.34. So if that does play out, and this is the retest of the neck break, you could be looking at that. But overall, we are looking a little hot on the RSI for a downside move. Let's come over here, take a look at this on the 4-hour. And see what it's looking like there on near, and then we'll see what we're seeing on the lower time frame. But looking at the higher time frame, yeah, it is definitely looking like it's doing a couple of things there for you. Well, I think that this is actually going to come down a little bit lower. I really do. We do have the quantum reactor there, and it is green, but look at the bearish divergence, downtrend, money flows coming down on the 4-hour. I would watch for us to come down to about 2668 down here. Dynamic reactor, 50% fib. From that bounce, look for it to head up to that 343. Yes, that would negate and be a little bit lower, but it could be a second test on that head and shoulder pattern. Honestly, if you look at that head and shoulder pattern, it's this here, right here again. So it would be in line with a test there on that if it took time to get down here. So still be on the neck, still would be an upside move. But right now, watch for a little bit of a pullback today down to, again, about 268. So that's what I got there on near. I hope that helps you out. OC, let's go and take a look at what else you got on alts. We got about 9 minutes before we head out of here. What do you got for us on your other alts that you were checking, OC?
Let's take a look at here. Well, I was just also following with you on that near thing. Let's go back and take a look at a couple of other things in here. And let's go, for example, here in Fartcoin. In Fartcoin, we were tracking a long that we caught very back in here. We were taking our early profits in here just in case it was going to be bouncing off. Then TP number 2, of course, in here. And basically, that was it. Just leaving 25% extra for that Hail Mary target all the way back at this area. We did create a trend line in here, and we're hitting that trend line. So for me, it's time to start looking for reversal patterns. So for example, right here, we have a bearish divergence. We're almost at the top. So that's almost exactly the same as near. So I will not be longing nor shorting anything else in here. So it's just calling out the short, calling out the long and looking for a secondary entry. What would that be? Maybe coming back in here, maybe 1 or 2 candles, something like that. And then if we're able to have a flip of the ribbon above the 0 line, that's when I'm going to be jumping in for the next higher high. Because if we start measuring these highs, well, we still have room to grow right there. So we can even be a little bit more peaky. There you go. That is our next target, same area, but farther down to the right. So that's what I'm going to be looking for. Maybe that continuation upwards. I think we're going to get it, but still we need for that confirmation. As always, I know it's a little bit stretched out, but a 1/4 of a position. Let me see if I can unstretch it. There you go. I think that looks much better. Going over Uniswap. All right, Uniswap trade note taken in here. It went up off between our fingers, come back down in here. And what I'm looking for is, once again, look at that oscillator. It's much evolved than the previous one. So let's go to Fartcoin. Let's see where that oscillator is at. That oscillator is at the top, start rounding back down, right? And if we go back to Uniswap, that oscillator, it has already gone all the way up, coming back down, trying to cross over that 0 line. And the next entry is going to be at right here at our support zone. So where are we going to be looking for that? Well, either right here as we create a couple of other candles, or maybe coming back down into dynamic reactor. In dynamic reactor, it's going to be our leading entry. So I'm going to be creating a trend line. This is an unconfirmed trend line, but looking for that support from this other support here. I'm going to right click on it and add an alert. And finally, of course, making sure that it doesn't move by locking it. So let me drop in here a little note. So we're going to be looking for a long. Perfect. So far, so good. Let's take a look at something else like Solana. Solana, by the way, yesterday on the Chart Prime class, in the Piper Academy, I was showing you guys that I wanted to jump back into a trade right there, but as I was giving the class, well, it started moving on me. Fortunately, Alex on crypto was, hey, I'm gonna long on Solana, and I was like, dude, I completely forgot about it. Let's check it out. I jump in, actually chasing after the price. TP1 hitting here, and then as we come back down, take me out on TP1. No loss, because remember, as soon as we are on profits, we move our stop to entry. Nonetheless, let's just keep an eye on what I was looking for, right? I was looking for a breakout, retest, continuation. We already have our secondary retest right here, and I think it's playing out. So let's go and mark this out like this. So what I do expect, it is a next run up to the upside, maybe having a break of structure in here, and then after that break of structure, a final movement to the downside. Where to? Let's bring up our indicators. I'm going to be aiming for the trend line, and here's somewhere where I would like to see it played out, somewhere around here or somewhere around here. So that depends. So let me add my alert sheet here for the next long that we could be going after the run up here. So far, I'm not going to be entering a long here because I just don't have enough candle structure. And if it started moving upwards, well, then I'll consider do a BOS entry right here. All right. So we're trying to tackle both moving to the upside and moving to the downside. Remember, if you're going to be doing your BOS or break of structure long, your stop loss needs to be very tight, usually going for these kind of candles, and then aiming for, I don't know, at least a 1 to 3 or a 1 to 2 risk reward ratio. Talking of, let's jump into ton. Ton played out very nicely, but there's a caveat: trade not taken. So I was looking at this area of entry right here. I in fact marked out my area of entry, but there was a little thing in here which I mean, look at the time that it played out. I was just finishing up with the gym. I did not look at it when I went to grab it. Well, then it was already too late. So I mean, judging by the distance between where we were in the first taking profit, that was just not possible for me. So trade not taken played out very nicely, but still, well, it's not on my pocket. So you will hear me whine about it a lot. All right. So other than that,
So the gym hurts your body and it made you miss a trade. This is, I'm telling you, the gym, it's number one cause of broke people, physically and monetarily. So we had a request for Griffin from Major Benefits. I'm gonna knock that out real fast here. So taking a measurement here, I had this high to low here that we were running on the fibs, and you can see we had three tops here that rejected in the platinum pocket. That's your 786 to 887. We dropped down almost pretty much to the 1-to-1 line or the zero line here for another run up. Got the multiple bullish divergences uptrend, rejected on the golden pocket. Matter of fact, couldn't even close a pocket above or close a candle, I mean, above that 0.66, and down it comes. What I would watch for here on this one, Major Benefits, is I would set up for a long down here, front run it just a little bit on the zero line, set up for a liquidity sweep beneath it with your stop loss, and then let this run back up to the 50. And that's going to give you about a 4-to-1 risk to reward ratio. Again, that entry on that's coming in at about 3.3 cents, 0.33. is about the entrance on that, and then stop loss. Of course, you can flex this based on your exchange. Take a look at the candles and make sure you leave yourself some room there. Make sure that you at least have a 3-to-1 risk to reward. But I am watching for that on Griffin. Money flow is coming down as of right now, but we are getting a power bar starting to fire here, which means we could be getting a reversal, but these don't play out always immediately. You can see here we had one too, and the bears just took control of it. I would say if this loses to 236, definitely looking at that level there for your entry. So that's what we got on Griffin. Guys, appreciate everyone that came in here this morning. If you guys are new here, go ahead and hit that subscribe button. It helps us out tremendously. We're trying to get as many people as possible to push this info out to. We go through a lot here every morning, Monday through Friday, 10 a.m. If you got anything out of it, hit that like button and share it with a friend, because sharing is caring. OC, I know you got to go to class, so I'll let you get out of here, bro. Appreciate you as always. Catch OC at 8 p.m. Eastern Standard Time. Trade live with OC right here on the Piper Academy Network. Guys, tomorrow morning, tune in with BC Port Corp doing Good Morning Crypto here on the Piper Academy Network. And then we'll be back at 10 a.m. bringing you guys all of the news, the charts, the data, everything that you need to have knowledge, because knowledge is profit. Until next time, guys, thanks for joining us. We'll catch you guys next time. Trade safe. Use some risk management. Peace, love, and profits. Later, y'all.
That's the rap. Chart stack data never lie. Piper led the mission, OC in the sky. Spaghetti on the screen, but the vision stay prime. Chart prime visual, signals on time. Alumni strong, we built from the grind. Lessons in the market that'll outlive time. Knowledge is profit, you know how we run. Till the next one, stay sharp, get it done. We'll see you at the next one.
What the fuck they're doing?
Morning market report out.
Boom shakalaka.
We'll see you at the next one. Morning market report out. We'll see you at the next one. Morning market report. Ow.
That was awesome, dude.
Hey, it didn't break. What else you got?